Hey everyone, welcome back to Corporate Decoder. Today, R.H.L.D just filed an 8K reporting its second quarter results, and I am seeing one critical number that might tell the real story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is mostly about announcing their latest earnings press release. So let's dive into what that release tells us. Alright, so Resolute Holdings Management Incorporated, or R.H.L.D, has put out their latest update for investors. This filing, an 8K, is essentially a way for companies to announce major events that shareholders should know about right away. In this case, the big news is their financial results for the second quarter and the first half of 2026. Ending on the 30th of June, they've attached a press release to this filing that lays out all the numbers. This company, Resolute Holdings Management, is involved in specialty business services, and it is currently trading with a market cap around $1.1 billion. They've got a price to earnings ratio of about 19.8, and their stock price has seen quite a range in the past year, moving from $40.21 all the way up to $236.19 before settling around $136.14. Interestingly, they only have about 7 employees, which is quite small for a company of this size. Looking at their stock, it is traded on the New York Stock Exchange under the ticker R.H.L.D. It is good to see that their shares are listed on a major exchange. They are also considered an emerging growth company, which means they have some flexibility with certain reporting requirements. And they've elected not to use the extended transition period for new accounting standards. Now, the core of this filing is item 2.02, which deals with the results of operations and financial condition. This is where companies disclose important financial information, and in R.H.L.D's case, it is all about their second quarter performance. The press release attached here is what gives us the juicy details. We're looking at the 3 and 6 months ended the 30th of June 2026. Okay, so let's break down what is in that press release. According to recent headlines, the big number they reported for the second quarter of 2026 is a non-GAAP fee, related earnings per S-hair of $0.69. That is the earnings figure that excludes certain items the company believes aren't representative of its core operations. However, their GAAP diluted loss per S-hair was a negative $1.53. That is a significant difference, and it is important to understand why there is such a gap. GAAP, or generally accepted accounting principles, provides a more standardized view of financial performance, and a loss here, even with positive non-GAAP earnings, can be a red flag. It suggests that there are significant expenses or adjustments impacting their reported net income. For example, there might be costs related to stock compensation, acquisitions, or restructuring that are pushing the GAAP numbers down. Investors often look at both, but the GAAP number is the one that ultimately affects the company's balance sheet and retained earnings. When we look at a company like Resolute Holdings, which has a market cap over $1 billion but a very small employee count, it signals a business model that is likely asset-light. This means they probably don't own many physical assets and instead focus on managing services or intellectual property. This can lead to higher profit margins, but also makes them more vulnerable to shifts in demand or competitive pressures. The difference between their GAAP loss and non-GAAP earnings is something to keep a close eye on, as it can sometimes be used to present a rosier picture than what is truly happening financially. For instance, if a company has a lot of stock-based compensation, that can significantly increase their GAAP expenses without a direct cash outflow, but it still dilutes existing shareholders. We also saw that the Chief Financial Officer, Kurt Skone, bought some company stock back in May. That is often seen as a positive signal showing confidence from within the company. However, even insider buying doesn't guarantee future success. We need to see the consistent financial performance to back that up. The fact that they've attached the press release here means they are officially making this information public record through the SEC. This is how companies communicate their financial health and strategic updates to the market. It's essential for investors to understand these reports to make informed decisions. The information in this type of filing is often considered forward-looking and subject to various assumptions and risks. And finally, signing off on this report, we have Kurt Skone, the Chief Financial Officer. This confirms that the information presented has been reviewed by the company's senior financial leadership. Looking at the broader picture, Resolute Holdings Management appears to be in an interesting position. Their asset, light model and small employee count suggest efficiency, but the divergence between their GAAP and non-GAAP earnings is a key point of concern. It suggests that while operational performance might be okay on a non-GAAP basis, there are underlying issues or significant costs impacting their reported profitability. For a company with a $1.1 billion market cap, a GAAP loss is something investors should probe deeper into. The risk I am watching is whether these GAAP losses are temporary or indicative of a more fundamental problem with their business model or accounting practices. What I am actually looking for is a clear explanation for the significant difference between GAAP and non. GAAP results and a path towards consistent GAAP profitability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord linked in the description.